The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and this is our hour to get you up to speed in the area of income taxes. And if you have any questions, by the way, a couple days ago was the extension deadline. So if you're somebody that still hasn't filed your tax return, of course, EG Tax is open Monday through Friday this time of year, 9 to 5. If you need a special appointment, we can take care of you. But we want to make you the smartest guy in the room when it comes to taxes so that you don't overpay. And, you know, if you don't do something that we advise you to do or let you know that is available to you, at least you know. And nobody can say, gee, I had no idea, because we sure want to help you. Our phone number in studio, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And, of course, I have my compadres in studio with me. Hey, Chris, how are you, sir?
Hello, Esther.
Christopher Fabian. Hello, Christopher.
I'm
and
doing
Tiffany
good.
Fabian.
Hey there, Esther. Happy Saturday.
Happy Saturday. It's nice to see the leaves changing.
It is beautiful.
But my girlfriend's just coming back from Iowa, and she said it was that it was snowing in Iowa. And I thought, don't tell me a four-letter word. That's not nice. But I just was looking here, and we want to talk. I want to teach you guys, and I want to tell you a story about our tax code and to show you how you would think that being married is such a good thing from a tax perspective. And we're going to hopefully teach you something today about that. That's what we're going to kind of concentrate on, all of the penalties in the tax code for people that are married filing a joint return, and the penalties that if you file married separately. So it's kind of you're between a rock and a hard place. But of course, if you have any questions, we're here. We certainly want to help you. 8030930, 8030930, star 930 on the cell phone. And I just was reading that Delta Airlines just posted, guess how much of a loss?
10 million.
Chris?
Oh, I would have to say probably closer to 200 million.
5.4 billion.
Oh my God.
You know, the airlines are in a big trouble. And, you know, I was just, you know, before Mike Hayflick was on and they were talking about the lockdown. This lockdown, I mean, there's nothing like protecting life. But what we have to understand is at the end of all of this, what is going to be left of our economy? Mm-hmm. You know, and that's so scary. So that's just Delta. The other airlines are having just as big of a problem.
Yeah,
so
Governor
Delta's going to
Cuomo.
borrow, I guess they're burning through millions of dollars a day.
Governor
in Reading.
Cuomo just allowed the movie theaters outside of New York City to open at 25% capacity, but I think
It's not enough.
Regal.
For them.
I think Regal is shutting
they
down.
can't sustain it, and you know, I mean, to me, it just breaks my heart to see people struggle, lose their jobs. They've worked so hard to get where they are, and you know, if we just have to be smart about this thing. So anyway, but that's interesting about Delta. In the meantime, what's happening in the wonderful world of taxes? What kind of letters are we getting, guys?
From New York State, we're getting letters about beneficiaries. So if you have a 1099-R with a code 4 and it's money that you inherited, you can exclude $20,000 spread among the beneficiaries off of New York if the person who passed away was over the age of 59 and a half. So New York State is
the beneficiaries.
Yeah.
The total, though, can't exceed 20,000, right?
Correct. And so New York wants you to prove that. So in other words, don't cave. Make sure you answer the letter and don't just pay it, and get the proof and get the documents that support it so you have a fighting chance.
And who helps people with that at no charge?
We do.
Right. So if you come in with your little letter and a copy of the tax return that you did, or the tax return that they're questioning, we will undergo that. We'll show you what it is, because sometimes I just had a client the other day that I saw, and they said, well, I know there was a pension missing. I know I put it on the return, and I said, nope, it's not here. Here's the one 1099-R, but where's the other? Oh, I don't think they sent it to me. Well, I said, so in this case, it's correct. But many times people might type it in wrong, or they put it in correctly and the IRS has wrong information. And so that gives you an opportunity to respond, because you don't always owe it. Many times you don't.
Right. Yep. And like for this, it's just sometimes supplying a copy of the license of the person who passed away to show they were over 59 and a half. It could be a simple solution, but sometimes it's homework, and it could be beneficial for you to do it.
This
So
week was the extension deadline, and if you were somebody that didn't file your extension, or you haven't filed for a number of years, it's okay. We're used to it. You can come in. We are very well adapted at helping people that haven't filed multiple years returns. So just come in, because we can get copies of your W-2s.
Yep, I can get them emailed to me. They will go into my secure mailbox. Then it's very convenient. I did somebody last week 5 years, and somebody else 8 or 9 years tax returns, and so got them all caught up, and they said they got the monkey off their back. Yes,
it's like going to confession. So let me, back in the days, a generation ago, when my mom and dad were married, what happened with the wife usually?
she stayed at home.
She stayed at home, right? And so that, and back then, taxes were just getting sophisticated, and they're really sophisticated now. But what they did was they fixed it so that there was a larger standard deduction. There was a benefit for filing a joint return, because really you got the extra personal exemption for somebody not working. Your tax rates were lower, and there was actually not a marriage penalty. But as ladies, as our society metamorphosized and ladies went to work, equal rights and all that stuff, of which I was the benefit, Tiffany's the benefit of that. What happened was the changes in the law did not keep pace with the change in society. So what's built into our tax code is a marriage penalty, kind of soup to nuts in all the whole code. So what I wanted to go over today was to show you just how much how if you and your spouse, now I'm not advocating divorce, but so you look at each other and guys, you maybe should get a divorce. But just to show you how if the two of you live together in your same situation, with you both working, in many situations, if not most situations, you would save a lot more money being single. It's interesting, a lot in the equal rights, when gay people wanted to get married, same-sex marriage.
I was thinking about that.
And they thought they were going to save money.
Yeah,
When I got all done with them, I'd say, oh, well, guess what? It costs you money for being married.
Right.
So I think the major benefit that I can only think of off the top of my head would be the second to die in an estate. But that would be for someone with an estate over $11 million. There's not too many of those people walking around.
Right.
So I wanted to talk to you about that today to make you so smart. Before we take our break, an 8030930, 8030930, star 930 on a cell phone, we got a text.
Yep, it says my ex-wife is a RN and I have been self-employed. My restaurant went out of business. I needed to start collecting Social Security and my monthly amount is very low. Should I have used my ex-wife's Social Security to get my monthly payment?
Well, you do have the option, if your spouse is 65, to use your spouse's Social Security and then collect yours
As
later
long as they were
at
married
age
for
70.
10 years.
Yes. Pardon me?
As long as they were married for at least 10 years, right?
Right. Right.
Right.
As long as, so you might want to call Social Security, and they will let you know when you talk to them which way would be better for you. Or you can call the financial guys. Mike Hayflick is a Social Security claiming strategist, and that would be another alternative for you. And I know they don't charge for that information.
Right.
All right.
Good
Why don't we
idea, good
take a
question.
short break? 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930, and we're going to show you all the penalties you pay for being married on the other side. Thanks for listening.
We are family. I got all my sisters with me.
Hey, and I got all of you guys with me. We are family. I'm Esther Golias, the tax lady, with Tiffany Fabian, Christopher Fabian, and your calls, 8030930, 8030930, star 930 on a cell phone. All right, I wanted to go to and there's a lot more than what I'm going to tell you, but just some of the things that if you were two single people living together, or especially if you were head of the household, if one of you was single and had children in the home, you'd find that you'd pay a lot less in taxes than being married filing a joint return. One of the first things is the pension savers credit. Now, when you're filing a joint return, that phases out at $64,000. But if it was two singles or a single with children, it would actually phase out at $96,000 because the two added together would be $96,000. So that's one example. Another one is itemized deductions. You know, we can only take property taxes or total taxes up to $10,000 if you're filing a joint return, right? But if two singles lived in the house, there would be $10,000 for this one and $10,000 for that one. So they would get the benefit of $20,000 in writing off, as opposed to putting their income together. You know, and so if they're in the 20% bracket, it would save them $2,000 in taxes, this one thing alone.
Yep, and you try to circumvent this by doing married separate, but if you do married filing separate, they limit the amount that you can deduct for
To
the one spouse.
$5,000.
$5,000.
To $5,000.
Yep.
So I mean, so all right. And then the next one is standard deduction. It's $24,400 if you're married filing a joint return. It's the same thing if you're single, $12,400 and $12,400. But if you are single with a child in your home, then it's $18,350. So if you had an $18,350 with a $12,200, you would get a benefit of more than $12,301 versus people filing a joint return. And if you're in the 20% bracket, that would mean that you save $2,460. In taxes. I mean, and we're going to go. When you're with your friends, say, do you know that all of us were overpaying because we got married? We got another text.
Yep, it says, hi, I heard that they just changed the laws on inherited pensions. What did they change? My mom passed away in April, and I'm going to get her IRA worth about $250,000.
Well, they're talking about that you have to take your, if you inherit a pension, if it's a non-spouse.
Yep,
if
you have
it's
more
a spousal
options.
pension, then it just per normal. But the inherited pensions, you have to take it over a shorter period of time, so it hurts more.
Yeah, it's now 10 years instead of over your lifetime. Excuse me. So, yeah, before it used to be over your lifetime, you could spread out that $250. Now the government wants their money now, so you could get 10 years to do it. But this is where tax laws get very confusing very fast. If it was your brother who was only 5 years older than you who passed away and you got his, you could do it over your lifetime. So there's different caveats.
Different things, right.
You got to really talk to us. I've had probably 4 people come in the last month or two where we're doing planning, and their financial person just totally told them the wrong advice. And they were counting on doing different things, and I'm like, no, you can't do that, and you got to do it.
Right.
And they're like,
Yeah.
but I said, they don't know taxes.
Yeah, right.
And they're like, wow, Okay,
And
so
it's very confusing. I mean, all of these things that they tinker with, every time they tinker, you have the old stuff and the new stuff and the new stuff coming in, and it makes it very confusing. So again, if you ever need help during the week, you can email us through our website at askthelady@egtax.com, or you can call us at our corporate headquarters Monday through Friday. Somebody's there, all senior staff is there from 9 to 5, and we're more than happy to help you. And again, if you're getting love letters, that's another thing.
you know, and we're talking about married separate, married joint, and you know, and the day that what day do they look at, Esther, to determine if you're married?
The last day of the year at midnight.
Yep.
At the stroke of midnight, whatever you are. And here's the thing about a filing status. It actually is like the steering wheel on your car. It is where everything points to. Everything goes back to your filing status. So the correct filing status really determines what tax rate you pay, how they phase out the law, all of the phase outs for itemized deductions and credits all go to your filing status. And whatever you are as of December the 31st of that year that's what you were for the whole year. So if you got divorced on December 31st at 11 o'clock at night, you're single for the whole year.
Yep. Or if you got
married,
Yep.
same thing. On December 31st at the stroke of midnight, at 11 o'clock, you're married for the full year. Many times couples come in, and you guys can attest to this, where you get done with their tax return and you find out somebody that might have used to get an earned income credit, now they can't. And they go, well, just make us single. Oh, well, you can't do that. It's like saying, so you flunked the sobriety test. Let's lie about it and say you were sober. Once you did the deed, it's done.
Yep.
So if
Yep.
you're legally married as of December the 31st at the stroke of midnight, that's what you are for the full year. If you're single as of the stroke of midnight, then you're single for the whole year.
That's right.
Right?
And
Right,
so
we got
it's
another
shocking.
text. And again, 8030930, 8030930, star 930 on a cell phone. What do we got?
It says in June, your office requested a form and I faxed it over. How long does it take to catch up? Well, I'm going to call this person because maybe it got lost. That's
Or we faxed it to the IRS for them.
yeah,
And they didn't open it up yet?
Yep.
right.
Because
right.
they were shut down till the end of July.
And New York State, once we fax forms to New York State, it takes 90 days or 60
Yep.
to 90 days. So I'm going to follow up with this person. And then there's another text that says, hello, my daughter was claimed as a dependent in 18, and in 19, she filed single living on her own. She did not yet receive the $1,200 stimulus. We waited and waited. What should we do?
Well, go on, Chris.
Because you answered your own question. My daughter was claimed as a dependent in 18 and in 19. So, in 19 she
19
filed
she was on her
single on her own. It depends when she filed her 19 return. So if she filed after April 1st, they're only looking at your 18 return. So
But
she's
they are going to give her an opportunity when she's doing her 2020 return. If you guys got the $500 for her, then that's a horse of a different color. But if you didn't, then she's going to have an opportunity to get the stimulus with her 2020 tax return. There's going to be a credit computation on there that'll give you an opportunity, as well as everybody else too, to straighten out the rushed stimulus money that they put out, because they were in such a big hurry to get the money out. It was not a perfect computation in many situations,
right.
right?
Yeah, and there's been some clients, they actually wanted me to take off their dependents and amend their returns so that their dependents would get the stimulus money.
And again, that'll be something that'll all be fleshed out.
right, and they're
within the
still waiting.
2020 tax return.
Yeah.
So it's very important when you're doing your 2020 return, or you're using a professional, that you bring in information as to how much you got, so that they can do that reconciliation for you. And those of you that didn't qualify because your income was too high in those years, but your income was lower in 2020, you're still going to be able to do what it was or what it is, whichever is better for you. So that'll be an opportunity as well.
Yeah.
All right.
Yep.
All right. I wanted to also go in, and again, 8030930, 8030930, star 930 on a cell phone as our calls. Capital losses, this is another thing that's in the marriage penalty. The maximum you can, on a joint return or single, is your maximum loss that you can take is $3,000. But if it's two singles in the house, then single A would be entitled to a $3,000 maximum loss against other income, and taxpayer B would be entitled to $3,000 in deductible loss. But if they filed a joint return, they'd only be entitled to 3. So they're entitled to 6 if they're two singles, but they're entitled to 3 if they have a loss if you're married filing a joint return. So again, and if you're in the 10% bracket, it's $300 you overpay.
Yep. And if you're doing married separate, you're only entitled to $1,500.
All those people that had to put off their marriages because of COVID right now, they're probably thinking, oh, well, that wasn't a bad
Just
idea.
have a big party
Yeah.
and not have a marriage.
My gosh.
I mean, it's unbelievable how much that's in there, and especially with there. You know, back in the olden days, back when we used to have wood for tires. You know, the thought of people cohabitating was like, ain't no way, Jose. If I would have come home and told my dad I'm gonna go live with my boyfriend, my dad would have killed me. Now it's accepted. And so that's the thing. The people that are living together are actually getting all the benefits, and the couples that did the right thing are kind of getting shafted. And so I thought it was important today to show you exactly how much you're getting shafted. So 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. On the other side, we're going to talk about more marriage penalties. There's a ton of them. And so when you go to a party this weekend, you can say, boy, did you know that all of us in this room are overpaying our taxes? And if we all got a divorce, actually it'd be worse because the kids are, divorce is a terrible thing, but I thought it'd be important. So we're going to take a short break, and we'll be back on the other side with your questions and your phone calls.
We are family. I got all my
Hey, to us, your family. We think of you as family. Those old-fashioned principles, we're talking about old-fashioned things, are alive and well at EG Tax. We really do want to help you. And so if you're between a rock and a hard place and you don't know where to turn, you can always turn to EG Tax. A lot of the things that we do are completely at no charge because we want to get you straightened out. So thank you for listening. I'm Esther Golias, the tax lady. 8030930, 8030930, star 930 on a cell phone. We got a follow-up to that one text, right, Jeff?
Yep, she said thanks. So she has till filing her 2020 to get her stimulus. You people are great. And
Oh, that's
what she
nice.
said.
Thank you.
Yes.
Thank you. Yeah, I mean, this, and by the way, I do believe that, you know, if they don't shoot each other in Congress, I think they're going to come up with another stimulus. So, I mean, it's just so contentious right now. But there are so many people. I don't know if you guys watched the other day on CNN where, was it Walt Blitzer who basically said to Nancy Pelosi, can't you compromise? Because people really need the help. You know, and she did not like that at all.
Oh, no, she went after him.
Yep. Okay, another marriage penalty is if you're married filing a joint return and you have medical expenses, then your medical expenses are multiplied by 10% of your adjusted gross income.
7.5%.
Well, that was last year.
It's still 2020.
Oh, it is?
Yep.
In 2020?
I just looked it up.
Yeah, you
Okay,
because
thanks
you
a
did.
lot. Well,
You just looked at
7.5%. So if your income collectively is $100,000, you're going to lose $7,500 of your itemized deduction. But if you both were single, maybe one of the spouses makes 80 and the other one makes 20, and the one that's making 20 is the one with the medical bills, then all they're going to lose is like $1,500 rather than $7,500 of their itemized deductions, which means there would be an extra $6,000 in write-offs, and at 20% they save $1,200 in taxes.
And
So
with the
that's a lot of money.
And with the higher standard deduction for married filing joint, $24,000, you may not hit it, but at $12,000 with
You
those
would.
medical bills, you could.
Right, absolutely, absolutely. And of course, on the state of New York There is not as much of a marriage penalty on the state as on the federal, because there are not as many credits on the state return as on the federal, where some of these limitations come out, but it's also alive on the state return. So, okay, we got another
Maria,
text.
Maria.
Maria.
We're gonna have to go
Hey,
phone.
Maria, how can we help you?
Hello, Esther. I'm interested in the topic today about two adults living together. Does that count for a mother and her adult single child?
Well, you would both be single. That would be correct. I was specifically thinking of a married couple. In your situation, you and your child would never be married filing a joint return. And so because you're both single, you both are going to pay the least amount of taxes,
Yay.
as opposed to if you were going to file jointly with your spouse.
And now, does your child live with you, or do you live with your child?
Well, he lives with me.
Okay. Is he working?
Yes, he is. But
Okay.
retired. Of course, I'm widowed.
Right. Well, what Chris is getting at is, any of you that have a child that lives in your house, no matter what the age is, if you were working and you were your income was more modest, although it's like $50,000 for 3 kids or more than that, you could get an earned income credit. But in this case, because you're not working, that wouldn't be available. But there are big credits for parents who have children living in their home and they're under the age of, well, of course, it's no matter what age, if it's a child, as long as you have income and the child is dependent upon you and it's low enough, you could get an earned income credit, but it'd have to be earned income.
And then
So,
vice
in your
versa.
Head of
case, ma'am,
household
you don't
as
have
well.
to worry, Maria.
Yeah, and vice versa. If your son supported you and some of those rules applied, he could
But
claim
you
you.
wouldn't get the earned income credit.
Right, but head of household could come
Had
into
a
play as
household,
well.
That would save you money.
Yeah.
Right, absolutely. So thanks for calling, Maria. All right, and we got another text, Steph?
Yep, it says, EG Tax Team, how long does it take for the IRS to respond to a Form 3949? I filed against a cheater. Well, it's so funny. Chris and I called the IRS the other day. Well, actually, this is Chris. I'm jumping off what he told me. And an IRS person said that they have trucks and trucks and trucks of mail in their parking lot. Because of COVID, they were furloughed and they're really, really behind.
Right. So, it's going to take them longer than normal. I would say the normal time frame would be 16 weeks if they're going to do any action. They're first got to see if it's worth it, how much it's worth it to investigate. So, right now, because of COVID, you got to give them another at least 2 to 3 months.
So why don't we, I think it's interesting that the child is filed against a cheater. So basically, they were like a whistleblower, kind of
Yep.
turning somebody in. You really never know how long that's going to take, because they, like Chris and Tiff were saying, they actually do investigation. And not all the time when you turn people in do they do anything about it.
Right. Because the other person they respond to, and the other person furnishes proof, possibly, and so they could settle the claim that way, and
Right.
just like you're saying.
All
And
right.
so it's
I'm
complicated.
Esther Gillius, the tax lady, 8030930, 8030930, star 930 on your cell phone, going back to the marriage penalty. If you're married filing a joint return and you have Social Security, your Social Security becomes half taxable when half of your Social Security added to your other income adds up to be $32,000, okay? But if you were two singles, it wouldn't be taxable until it gets to $50,000, right? 25.
Right, 25 apiece.
Right. The other thing is on an IRA. You can put money into an IRA up to income of $123,000 if you are covered under a qualified pension plan. If you were two singles, you could make income up to $148,000 and still put money into an IRA. I mean, it's like pervasive. It's like every part. When I was doing the research on this, it's like but I didn't really do as much research as I was getting ready for the show. It's really in every part of the tax law. So why don't we go back to the phones? We got Carla, right?
We do.
Hey, Carla.
Hi, Esther. How you doing?
I'm good. What can we do for you?
My mom died in 2019. She
sorry to hear that.
with a will and a life estate.
Okay.
She had 4 daughters.
Okay.
We sold the house this year, and we paid off a sizable reverse mortgage that she had. 2 of my sisters who are in the life estate are out of town. They're out of state. Now, after paying off all the debts, we ended up with about $30-some thousand that I was the executor of the will, so I split it up between 3 of them because they had put sizable money into fixing the house up to get it ready to sell. I split it up between my 3 sisters, not including myself, and now I'm wondering about the tax ramifications for them and me.
Okay, why don't you guys
Good
tell us? She
question.
said there was a
A life estate, right?
Okay.
I'm
right.
thinking you guys fixed up the house and you sold the house, and is that where the money's from?
No, they sold the house, but they had a life estate. They inherited the house, so they would get a stepped-up
Stepped-up
basis for the house, which would mean that whatever it was worth at the fair market value of her death would be what it would be,
Which is
for
very,
cost
very
basis.
good news.
So probably there, after you take all your expenses of sale, there'll be no taxable gain.
Which is really good news for you guys, Carla. And you could even have a loss. So it depends on how much you guys put into it, whatever.
But the only weird thing is, I'm surprised that on a reverse mortgage they would allow you to do a life estate. Are you sure
Yeah.
there was a life estate on there?
Yes, we took out the life estate before the reverse mortgage.
Okay.
Yeah, but that's what Esther is saying. They shouldn't have done a
Because
reverse mortgage.
usually what they do is the life estate, but either way, if you inherited it, whether you inherited because it's a life estate
Or the other way.
you inherited it because your mom passed away, you're going to get a stepped-up basis. So it sounds to me like you're not going to have a problem, but if you want us to do some research, we can talk to your attorney to make sure what you're saying is correct. We just want to make sure
And-
that it wasn't a gift, but it sounds like it wasn't.
Make sure you save all those receipts for all those repairs that you guys did, because that'll all help.
After mom passed.
Yeah,
Right,
help
after
for
Mom passed.
the basis, to increase that basis to maybe
Okay,
even.
and our phone number is 632-7886 at the office. Okay, or you can go to our website.
Thank you very much.
Thank you, dear. Yeah, and in this case, so when somebody passes away, if you inherit the capital asset, all right, then the fair market value on the date of their death is what it's credited to you as purchasing it for that figure. So then if it was worth $100,000 when they passed away, you sell it for $100,000, there's no gain. If they gave it to you during their life, they said, "Here, son, I want you to have this this painting, and I paid $5,000 for it, but it's worth $100,000." That's the problem, because a gift goes back to the donor's original basis. Okay, so then there would be a capital gain in that situation. All right.
That's right.
Going back, and again, I know we got calls, but going back to the marriage penalty, if you have a rental loss and your income is over $100,000 and it phases out at $150,000, the maximum loss you can take on a rental loss, if you're filing a joint return or if you're single, is $25,000. But if there's 2 singles, then it'd be 25 and 25, so you'd be able to take 50 against your income. So that's another marriage penalty.
Stacking the deck
All right.
some more.
Yeah, that's right. All right, and I think who's our next person? waiting? Mike. Hey, Mike.
Hi, Esther. Hey,
Hi.
question. This year in March, I've been behind. I finally filed my 2016 taxes by mail. I've since then I've got my 17, 18, and 19 taxes finally organized and ready to go. But I'm just wondering, can I file electronically on those or only by mail? Because I'm still waiting to get anything back from the government. I've gotten nothing yet.
Yeah, you got till November 15th
To do electronic.
to do electronic.
Yeah, it's Chris and I held the other day for 2 hours at the IRS for somebody who did a paper return, and we finally got through. I don't know why, maybe because of the extension deadline, they were so busy, and they still have no record of that paper return.
And the reason it's November the 15th is why, Chris?
Because the IRS has to get their computers up and ready
So it's
for
not
next
like-
year.
It's not like it's any law. They placed it at November the 15th because they have to get ready for the 2020 tax season. So they take down their electronic filing capabilities so they can get their computers ready.
And-
So that's why you want to make sure you get in by then.
And did you mail your 16 in? When you mailed it in, did you do it certified or any type of return receipt?
Yes, yeah, just so I could get that little green tag that comes back to me, and I put that in an envelope, and then I put that envelope in my safety deposit box.
That's
Well,
a good
that's
idea
good.
because you may need it because
Yeah.
you have proof you have it postmarked before April 15th. So you would still, if you have a refund for 2016, you will still get it. So make sure you keep that green card safe.
Yeah, and
Okay.
yeah.
And
All right, Mike. I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We're going to take a short break and be back with your calls on the other side.
We are family. I got all my sisters with me.
Hey, I'm Esther Gilius, the tax lady from EG Tax. We love helping you, 8030930.
Yeah, and Esther,
8030930, star 930 on a cell phone. Yes, ma'am.
Hey, I wanted to say, Mike, he might want to e-file his 19 and 18 before that window closes. Just a thought,
Of
and
course.
especially because his stimulus money is driven by those years too, getting the stimulus, $1,200.
Absolutely.
Yeah.
Absolutely.
So-
Okay, now do we have Carla still holding?
Carla went bye-bye. She did not
Carla
want to
went
wait.
bye-bye. Okay. We were talking about some of the, the marriage benefit. There is actually the opposite that happens when you're doing your tax return. Another marriage penalty is for charitable deductions. Now, this year in 2020, you're going to be able to write off medical expenses without itemizing up to $300. And that would be on a joint return. But if you were two singles, you'd get 3 and 3. You get $600.
Yep.
Living together, same household. The other interest, and again, 8030930, 8030930, star 930 on cell phone. Earned income credit. This one was interesting. The earned income credit, the maximum income that you can earn and have a qualifying individual that lives with you is $55,952 if you have 3 or more children, 3 or more qualified individuals. So in your situation, you might have $55,952. If you're filing a joint return, if you were two singles, you could actually make $100,324 and still get the earned income credits if you both had qualified children living in your home and they weren't your own, right?
Right.
Wow.
I mean, and the earned income credit is there because you're supposed to be poor,
Yeah.
right? And if you were married, nobody'd think you were poor. But two singles living together with kids and without the benefit of marriage would qualify for the earned income credit.
You're stacking the deck even more.
It's terrible, isn't it?
It is very
and
bad.
then one more.
And the
before I
calls
go
are
to
coming
the
in,
other
too.
things that they do.
Well, the calls
if
are
your,
stacking
If your
up.
student loan interest, if you're married filing a joint return, it's $2,500. Two singles, $5,000.
Yep. You each get 2,500,
Each,
where a
right.
joint only gets 2,500.
So that's just a few, and I got more coming, but we're going to go back to the phones, and we're going to talk to
Lynn.
Lynn. Hey, Lynn, how are you?
I'm doing fine, and I just have a quick question.
Yeah.
My husband and I purchased a retirement home in Florida this year.
Congratulations.
Thank you. We're hoping to see it in 4 years. We're raising a family member right now, so we've got a few years before we move in. I'm wondering, we have a house here in Buffalo. It is paid for. Can you tell me, is there anything we can take off of our taxes this year in the line of interest, taxes down in Florida with
All right.
our taxes this year in Buffalo?
Why don't you rent it out? Why don't you rent your Florida house out?
Everybody wants it rented out, but everybody does. They just want to do it as friends. and say, "Listen,
Okay, well, you can't. You can do it with as friends, but you should charge them fair rental value. Now, here's the benefit: if you turn that into rental income and you use it less than 10% of the time it's rented, or 14 days personally, it'll still be investment type property. You'll be able to take all the expenses to operate it: the water bill, the repairs, the taxes, the
Utilities.
insurance, the utilities, going
HOA
down to
fees,
take
if
care
there
of
are.
it, the yard work, the common area fees, all deductible. And it will, and plus depreciation, and it would save you some money. And that's what I would suggest you do. What part of Florida is it in?
the Villages."
The Villages,
Village.
Florida's friendliest hometown. Yeah, I mean, you could probably do very well there.
Otherwise, if you don't turn it into a rental, probably there's very little you can deduct
Very little
under the
difference.
new tax
I
reform.
Truly would recommend you come in. We'll give you the lowdown, but I would look at that. And I will
Especially
tell
because you
there's
can't go
management-
there for 5 years.
There's
so.
management companies that will take care of it for you and charge you 10%, which is also deductible.
Yep. And then when you're ready to go, and the nice
just
thing
kick
about those
them out.
management companies is you can carve out the time that you want to go there.
Right.
You know.
Right.
So, but then the money that you would make for rental would be considered your income.
Right, but you
Well,
get to deduct
But then you
everything.
deduct all this
Expenses.
stuff. I mean, so let's say that you have
I'm in.
20,000. Let's say you have 20,000 in rents. Then your property taxes are deductible, and
Depreciation
and you
part of the
made
house.
20,000. You get to then cover it with everything. Believe me, you will be a happy woman.
Let us show you. You
Let
would
us
be a
show you
happy
how.
woman.
Oh.
You would be a happy woman.
Yep, you really would.
Well,
Okay,
definitely
Lynn.
come in this year.
All right, thank you, dear.
And you don't have to wait till tax season. You could come
Yeah,
in
you
now
can
to
come in right
plan,
now.
and it's
Yeah,
no
'cause
charge.
We'll
and
help you, because right now is when you should start lining
Yeah,
up.
because now people are looking to start moving down
They
there.
are.
right,
That's for sure.
right. Just and
All right,
it's
then
no
we got
charge.
Mary Ann. Hey, Mary Ann, how can we help you?
Marianne,
Mary Ann.
Mary Ann from Lewiston.
Okay, let's go to Bob.
hold on.
Hey, Bob.
Oh, you hung
Oh,
her up on
I
her.
hung up on her accident.
Hung up on Mary Ann.
I did.
Bob.
That's your mother's name. Mary.
I know.
All right, Bob.
Yeah, hi.
Hi, how are you? How can we help you?
Well, I've been, over the past few years, I invested in physical silver, and I bought it in like 1 ounce, 5 ounce, 10 ounce bars. And recently, over the past few months, I've been selling it over eBay, my piece, since the price has gone up. And I'd like to know how do I file, or how do I account for that on my tax return? I've made a pretty good profit on it so
Here
far.
you go. All right, Chris.
Good
How does
question.
he report it?
Well, now, was it being held for an investment, or were you doing it to make a business out of it?
Well, not really a business. I bought it as an investment, hoping it would go up, and it is, has increased in price, and so now I've been selling it. So yes, I bought it as an investment, but I'm not really, I wouldn't call myself a business.
Okay, but are you buying more now? Are you
Oh, no, I'm just selling it now.
okay? Because if it was just strictly an investment, it would be a Schedule D transaction. But if you're going to keep doing it, almost like flipping a house, it would go on a Schedule C.
But it sounds like
So
it goes
where
on
then the
sale.
profit
like
would
an
be subject to
investment,
self-employment
right.
tax.
But it sounds like an investment to me.
Yes.
So you know what you paid for it and what you sold it for, right?
Yeah, I'm keeping track of all my, costs and
That's good.
expenses involved in.
So then it's a capital gain. You've held it for more than a year?
Yeah.
All right, so as long as you held it for more than a year, then you're going to have, you'll pay capital gains on the gain.
Okay, and you said Schedule C?
A D is in
Schedule
David.
D.
D is in dog.
Okay, great.
Okay?
Thank you very much.
All right, thank you.
Good
I'll tell you,
question.
people are investing in gold and silver a lot because they're trying to, a lot of people are apprehensive about what's going to happen with the election, so,
Yep. And if people are out there, and I just want to say this, with experience doing taxes, and you like what we're saying, and you like how we operate, and you want to join our team, be part of the family as a preparer, give us a call. We'd love to talk to you to see if we can make it a fit and make it work out. We'd love to have you as an employee.
Amen. All right, other things we want to talk about, other penalties. Now, then you heard some of the things that I said that are marriage penalties, so then you think, okay, great, I'll file marriage separate, right? Once you're married, filing a joint return, once you're married, you either have to file married joint or married separate, unless there's a situation where the two of you weren't living together with children in your home, which is another thing. But if you file separately, you can't take the earned income credit, you can't take a daycare credit, you can't take student loan interest. If one itemizes, the other one must, so that's a penalty as well. No adoption credit if you live together. No American Opportunity Tax Credit or tuition and fees deduction, that's a penalty. No rental loss if you're married filing a separate return, unless you were a real estate professional. And 80% of your Social Security is going to be taxable no matter what. So that's just some more penalties instituted on married couples because they need to change the law and be friendly to married people, in my opinion.
Right, right. What's so funny is you have here student loan interest. We had a client come in Friday, and she goes, oh, my daughter gave me this. Her school said I should be able to write it off on my tax return, and it was student loan interest. And Tim pulled up a return and goes, well, you're married separate. She goes, what does that have to do with it? Well, you can't claim it. You're married filing separate. Well, my daughter's school said I can, so I have to be able to. And he's like, no, I'm sorry. He showed her the law and everything, and she's like, well, you're wrong, and stormed out of the office.
Well, you
So-
know, sometimes you have to give people bad news. We could put it on the tax return, but if we did, they would just adjust it at the IRS's end because they'd say that's not in the law.
Yep.
So it's interesting with everybody breaking laws all over the country. It's interesting how we're being held to not breaking the law, right? Right?
Yep.
It's true.
But we do it the right way, and we
Right.
teach you different things.
So anyway, so if you're married filing, if you have married separate, you can always go back and file married joint. So the election is if you file married filing separately, you can always go back and become married filing a joint return. But once you're married filing a joint return, after the close of the tax year, you cannot go to married filing a separate return.
And that's a good point there, is that there's a lot of clients that I do married separate, and so you might want to look at it before the tax season closes, because like Esther said, you can't go back and
Right.
change that.
So anyway, that was your lesson for today, everybody. We want to make sure that you're smart and you can see that there's a filing a joint return. You may have thought that if you're both working and you're filing a joint return, you're saving money. The truth of the matter is there are all kinds of taxes built into the tax code that work against you when you're filing a joint return, and there's nothing you can do about it. So love is bliss, but it's very taxing, right? All right, until next week, I'm Esther Gullius, the tax lady from EG Tax. You can go to our website at egtax.com. We have a place on there, Ask the Tax Lady. There's all kinds of helpful things that on our website. If you're looking to retire, there's letters that you can have in your estate in the event that you want your heirs to know where your assets are. So all kinds of things. And of course, we're there 9 to 5, Monday through Friday. Until next week, I'm Esther Gullius with Tiffany Fabian and Christopher Fabian. God bless you. Have a great week. Bye-bye.